Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you for coming on today.
Happy to be here.
Well, let's start with Wall Street, where last Friday we saw moderate gains on all three main indices for the session. Looking back, we closed out the month of March, making it the worst quarter for U.S. stocks since 2020. But stocks have been coming back. For the S&P 500, it was the third weekly gain in a row. What's the story in the global markets as we start a new week?
Okay, well, the U.S. market was generally skittish last week, hovering between positive and negative returns. As you said, on Friday, all three indices rose, but on Wednesday and Thursday, indices were mostly down, though NASDAQ was up. During the Thursday market, two-year bond yields rose above 10-year yields, so inversion did take place, which may account for why market fell on Thursday. Now, why did the markets go up on Friday? Well, the March employment report was out, and U.S. economy added 431,000 jobs. It was around the amount that was estimated, but it was relatively strong. And now the U.S. is only about 1.5 million jobs down from the pre-pandemic levels. That's about 1%. Also, on Friday, oil prices fell below $100 as President Biden said he will release the strategic reserves. So for the week, the results were, well, for the most part, mediocre. Dow fell by 0.1%, S&P rose by 0.1%, NASDAQ rose by 0.7%, but the futures today were flat, so the market doesn't seem to be very exciting today. The general consensus is that the markets are waiting to see the Fed minutes that are coming out on Wednesday. For the month of March, the markets did fairly well. Dow rose by 2.2%, S&P by 3%, NASDAQ by 3%. During the early part of the month, the markets took a large hit because of Russian invasion into Ukraine, but they're almost entirely out of that drop. The markets seem to be shrugging off the concerns about inversion. The long-term yields are probably distorted because quantitative easing has brought the long-term bonds down. So that may be one of the reasons why the markets are not as concerned as before when inversion took place. Another reason is that even though inversion usually preceded recessions, it could be anywhere between 6 months to 2 years when we see that recession. First quarter results have not been very kind to stocks. For first quarter, the Dow has went down by 4.6%, S&P down by 4.9%, NASDAQ by 9%. It was the worst quarter since first quarter of 2020, the beginning of the pandemic. Now, European stocks, it was generally down since the 30th for the DAX and CAC, down since 31st for FTSE, but it opened mixed today. DAX was down somewhat. CAC was down somewhat, but FTSE rose by a little bit during the opening of the trade today. Asia, last week, Nikkei had a downward trend. Hang Seng and Shanghai had an upward trend, but all three indices are up today. They haven't finished trading, but they're all up, and Hang Seng is actually up by more than 1.8%, so Hong Kong is doing very well.
Well, today, Korean stocks were higher, too, by a moderate amount. Among the biggest companies, though, is a real mix. Retail investors were buying, foreigners were selling. Tell us what's happening in the domestic market.
Okay, well, Kospi was up 0.66% and ended at 2,757.90 today. Kospi is on a roughly upward path since March 15th. One explanation for recent growth is that foreign investors are scared off the U.S. market because of the inversion, so they're searching other markets such as the Korean market. And the market rose today on strength of foreigners buying the Kospi stocks. Today, individuals sold, institutions and foreigners bought, and the dollar and the yuan appreciated on the strength of stock investment by foreigners as well. But for year to date, the Kospi is down by 7.7%. Kosdaq was up 0.72% today, and it ended today at 497.32. Individuals bought, institutions and foreigners sold. Year to date, Kosdaq is down 8.7%.
Well, Professor, let's also check in on the cryptocurrency market. The all-time high for Bitcoin was last November, and it's since been trading in a range that, at least for Bitcoin, you could almost call sideways. What do you see happening in the crypto space, whether that's affected by the approaching end of the pandemic, the war in Ukraine, or other factors?
Okay, well, the Bitcoin has been gaining strength in the last few weeks, and people are saying that this is going to be a comeback for Bitcoin. And as they said plenty of times before, this is going to lead to a general acceptance of Bitcoin. I'm still a bit of an agnostic on that. One of the original purposes of Bitcoin was that it had fixed supply, so it would not be affected by central bank possibly printing too much money. So if their intention was correct, the Bitcoin should be reaching all-time high prices right now because of the high inflation due to very high liquidity right after the pandemic. But as you mentioned, after it reached the highs in early November last year, around $67,580, it started to drop on November, and that's when the concerns about inflation really took off. So as an inflation hedge, at least so far, it doesn't seem like it's a good investment. Right when people were starting to worry about inflation, the value of Bitcoin actually fell down. So when did it start picking up again? Around February, late January of this year. I think the big factor here is the Russian invasion of the Ukraine. When the Russia invaded, and the sanctions took place against the Bitcoin. Russian people used Bitcoin and cryptocurrencies to save their wealth, escaping from the rubles, which value was falling very quickly. And there were also reports of money transfers using Bitcoin and cryptocurrencies to get around sanctions, especially for regular Russians. The oligarchs do not seem to be using that much of a cryptocurrency. They have other legal and semi-legal means to try to get their money out of the ruble. Now, other factors which may be affecting the Bitcoin in the last few weeks, El Salvador, which used Bitcoins as one of their official currencies, had planned to issue $1 billion worth of Bitcoin-backed bonds, which may have perked up the market. But last week, suddenly, El Salvador decided to postpone the issuance of those bonds, saying that the time was not appropriate. The Bitcoin 2022 conference is also coming up, and that usually excites Bitcoin investors as well. This time, apparently, their speakers in that conference include Peter Thiel, the creator of PayPal, and I don't know why she's speaking there, but Kim Yeon-mi, who's a North Korean defector, she also is scheduled to speak at that conference to probably say good things about Bitcoin. But again, it doesn't seem like it's acting as a typical inflation hedge, and the rise in Bitcoin may actually be the last hurrah because there is still excess liquidity. U.S. Fed is raising interest rates, and it's going to start to absorb this excess liquidity, but they really haven't done that much of it yet. So all that money may be going somewhere, and one of the places it's going is Bitcoin, at least until U.S. Fed starts absorbing all this liquidity.
Right, and we've seen some regulatory issues come to the fore in recent weeks in some jurisdictions as well. Professor, we're going to have to leave it there for today. Thank you, as always, for coming on and sharing your insights. We appreciate it.
Thank you.